Hello, this is Brooke, DeFi analyst from Today in DeFi. I would like to quickly take a look at the interesting news about the Genius Act. The act recently passed by the Senate of the United States a few weeks ago. However, the current progress of the act is that it's not yet enacted. Right now, the next step for the act, both chambers of Congress will form a specialized committee with the relevant members, and they will review the act, reconcile, and also compare it with the other act proposed by other congressmen, such as the Stable Act. And then they will make some amendment to the act. And then amendments done, the final version of the Genius Act will need to pass both Congress and Senate again. And then it need to be signed by the president, and then the act will come into effect. So that's the current status for the act. There's still a long way to go. A lot of people saying that the act will not pass in the end because the act is mostly in favor of a large stablecoin issuers such as Tether or Circle. However, a lot of people see this actually hostile to most of the deposit banks. And later on, we'll explain why that's the case. And this is also the biggest reason why a lot of people believe that the specialized committee will not endorse the Genius Act, and therefore the final version of the Genius Act will not be passed and therefore to effect. However, we'll further explain what all those means. But right now, take a quick look at what the Genius Act is about. And if it is really true, what a lot of people say, Genius Act is like bullish for the crypto market. So Genius Act, in essence, to provide the legal framework for the stablecoin to be issued and to be used as a payment tool, and then to be processed by different parties within the United States. And then to be more specific, the stablecoin here in the act refers to the payment stablecoin. The term payment stablecoin means that the digital asset, as referred in the act, be used to process the payment. It cannot be a security. The main purpose of the stablecoin cannot be investment, trading, or activity in the payment purposes. And that is the stablecoin this act is talking about. And the reason why it's doing that is because it's trying to define the stablecoin concept to be like a less correlated or related with the other financial concepts, such as crypto trading or the DeFi activities. And in this act, those people who can issue the stablecoin are first a subsidiary of the insured depository institution. That refers to most of the commercial or the retail banks, and also the federal qualified non-bank payment stablecoin issuers. And those refer to, for example, right now, Tether and Circle, and probably also Frax and Ethena or BlackRock securitized. And lastly, the state qualified stablecoin payment stablecoin issuers. And this is basically the same as the second category, but just with a smaller scales and only active in a state level, not active in the national, federal. And right now has already defined what kind of stablecoin and to cover and who can issue the stablecoin. And below are some of the limitation requirement to issue the stablecoin. First of all, the stablecoin be backed by the qualified asset with a one-to-one basis. And by qualified assets, this act referring to, for example, US dollars, it means the cash, and also the treasury bills, notes, and bonds. It means the US treasury with short maturities, such as less than 93 days. And also the repo agreements, eligible repo agreements based on the treasury bills with the given maturity date in China. And lastly is the money market fund and also the central bank reserve deposit. It's basically the same as the assets like what Tether and the Circle are holding at the moment. And that's the reason why Tether and Circle are believed by the market to be the biggest beneficiary of the act. Because even though there are a lot of limitations mentioned within the act and there are a lot of rules, so far at the moment, it looks like if the act is really passed, Tether and Circle will be eligible to be part of the act and then apply to be a qualified stable issuer immediately because they check all the boxes. And therefore, a lot of people believe that the market share will therefore increase. And then the more important thing that going to be a legal framework that is applicable to this kind of stablecoin issuers. Therefore, market will be able to understand how they works and be able to interact more directly and also more normally. The incident like the Silicon Valley Bank, during the Silicon Valley Bank incident, because it was using the Silicon Valley Bank as one of its banks to park its reserve. And when the Silicon Valley Bank bankrupt, a lot of people discovered that they actually traded directly with Circle. And therefore, that period of time, and even till now, there's no legal framework to define how a stablecoin issuer should interact with the banks and how the banks should interact with the stablecoin issuer. And therefore, a lot of people blame Circle for making Silicon Valley Bank went bankrupt. With this kind of incident, it should be less and less frequent. And I think that's one of the biggest tailwind for the stablecoin issuer coming from this bill. And now that we understand what the act is about, and then what's the limitation it should be applied upon the stablecoin and also the stablecoin issuers. Now we can further move on to take a look at who can benefit the most from these stablecoins. Other than the Circle, USDC by Circle, and also the Tether, USDT by Tether, other beneficiary includes Frax. So Frax in the past issued the stablecoin called the Frax. Even though part of it is backed by RWA, most of it is actually on-chain assets. A few months ago, Frax issued a new stablecoin called Frax, and then it split its balance sheet into two parts. The first part, which will right now include 100% of the on-chain asset, only backs the legacy Frax stablecoin, which is a FRAX stablecoin. And then the spin off the RWA parts, which mostly consist of US Treasury, they use this part of the balance sheet to back the newly issued fractures. Their goal is very clear. They want to make FRX USD fractures part of the Genius Act and therefore boost the market share and make it one of the stablecoin people will use to process their daily payment activities. And the next beneficiary probably with Ethena, even though the most known for their USDE a few months ago, they also launched the USDTB in collaboration with BlackRock and Securitize. The USDTB is actually 100% backed as well. People believe that even though USDE has already been very successful, still insist on issuing the USDTBs also because they want to have a share in the growing market of the stablecoin payment network. And that's also related to the Genius. It's only referring to issuers trying to be part of the payment network if the Genius Act is passed. However, if there's going to be a payment network, it means that people need to deposit stablecoins and keep them on chain so that pay bills when they need to buy something, they have money at their disposal. So it means that the act acts very hostile to the banks in the sense that it is actually competing with the bank's TVO. So right now, as a normal people, salaryman, when we get the salary, monthly salary, our first action is to deposit it into the bank. And the second action would be probably use the bank balance to pay our bills and then to make any investment. However, if there's another payment network that has completely nothing to do with the banks, for example, right now, like the payment stablecoin network, like what Genius Act is talking about, it means that in the future, when I get a salary, I can actually choose to mint the stablecoin and move my stablecoin on-chain and then put 50% or all of my saving on-chain because the payment is going to be like what a lot of people are saying, it's expected to be like much easier on-chain than dealing with the banks. And on top of that, the on-chain yield is also more attractive than the bank deposit at the moment. That's the reason why a lot of people believe that the act is actually hostile to the banks. And they also believe that's the reason why the Genius Act will not pass the specialized committee reconciliation. And that's because the bank will try their best to lobby the people who are involved in the committee and therefore to affect the final decision. So that's the situation and how the people in the financial industry see the relationship between this act and the banks. And so we talk about like if the act is real passed, there's going to be a lot of the stablecoin part on-chain for daily payment and also for daily transaction. And if the money is part on-chain, it means that there's asset management opportunities. And that's the reason why a few months ago, there's a new category appear on DeFi Llama. It's called risk curators. Risk curator has been there for quite a while. In the past, risk curators, for example, curators on Morpho or Euler, when you deposit your money on Morpho or Euler, this risk curator help you to allocate your asset across different kind of the borrowing market and therefore help to minimize the risk, trying to find the best risk-adjusted return. However, with the news of the Genius Act, this kind of risk curators are getting more and more active or aggressive. They are expanded onto the active asset management field, for example. And that's the reason why we're seeing like before the end of last year, the TVO of the risk curation business is actually pretty minimum. Even though it's growing, but there's not much going on. However, with the news of the Genius Act, you can see that the TVO starts to skyrocket it. And a lot of people believe that they are positioned to be the first to benefit from the first wave of the on-chain surge in TVO if the Genius Act is really passed. The Gauntlet, like the back example. So Gauntlet, also likewise, it first started as a risk curator on Morpho, helping people to passively allocate their asset across different lending markets and therefore to boost and minimize risk. However, following the news of the Genius Act, they expanded onto the active asset management field. And right now, they're introducing different kind of votes and then to attract the TVO on-chain and to benefit from this wave of the boost in the stablecoin supply. So this is one of the votes currently managed by Gauntlet. It's called USD Alpha. Casino is pretty young, launched in the June 2025. And the strategy is actually pretty simple. So it helps you to allocate your asset across different markets. So right now it's only Morpho, but according to its roadmap and a white paper, it's definitely not limited to Morpho. It's aiming to expand it onto like other yield farming opportunities, such as LP, lending, and the leverage looping, staking. So the main goal is to provide better yield. So from the risk curation business perspective, their main goal is to provide better yield than the banks, because right now banks like in the United States can only give you like 4 and maybe 5%. However, on-chain right now, they can give you like at least 7 to 8 or even 10 to 15% at the moment. And that's the reason why a lot of people believe that even though the Genius Act is about stablecoin payment, it's more of a lie, because a lot of people believe that more people care more about the on-chain yield, and they are eager to have a legal framework to allow them to take advantage of it. So that's the reason why immediately after the news about the DAC, we have the risk curation business like booming right now. The TVL growing pretty fast, and all these curators are launching new votes every 1 or 2 weeks right now, just like the Gauntlet USD Alpha vote you're seeing here. On top of that, another group of beneficiary are those people who are currently issuing the credit card. Because if you're depositing your money on-chain, it means that naturally, just like when you deposit your money in the bank, naturally you'll have the demand to borrow money, because probably your salary not distributed yet for this month. However, it is back to be distributed in a few days. However, you want to make a payment today, and therefore you need a credit card. And that's the reason why DeFi launched their DeFi cash card, and also Moonwell launched their Moonwell credit card. It's very clear right now. The acts encourage the people, all this business on-chain, to replicate what the bank's doing at the moment. So as a manager, when you deposit money in the bank will ask if you want to buy mutual fund, if you want to subscribe to stocks, if you want to buy ETF, and likewise on-chain. This risk curator will ask if you want to deposit into the funds, if you want to buy this fund, if you want to buy that fund. On top of that, we deposit money into the bank. The bank will ask you, do you want a credit card? Do you want a debit card? And because they want to make more money from your deposit. This kind of stuff is already under discussion, and then people are actively looking into it. So these are all what the Genius is about, and some of the ripple effect and the main group of beneficiaries. So first group, the stablecoin issuer. Second group, risk curators. And then lastly, DeFi cash. It's like the credit card, debit card issuer on-chain. And however, it looks all very pretty and optimistic, but we need to ask a few questions, like if Genius Act is really that significant, and whether or not it is really bullish for the crypto market. So judging from the payments perspective, right now within the country, for example, like US, for payment, we already have PayPal and Venmo, and like in China we have Alipay and then WeChat Pay, and like in Japan we have PayPay, and then in Korea we have like Kakao Pay, and in Taiwan we have like the Line Pay. So a lot of people are questioning if this kind of on-chain payment stablecoin is really making a difference. If we already have so many payment tools, they can help us to process the payment within seconds already. And we don't need to bother to learn a completely new system. We just need to connect those payment service provider with our banks. And so this is the first question. People are asking if the payment stablecoin introduced by the Genius Act is really that significant. And the second question is that right now, the reason why Genius Act is attractive to the everyday depositor like you and me is that because on-chain yield can be very attractive. Right now, it's like earning like 10 to 15% at the moment. However, because in today in DeFi, we're doing like farming and trading on a daily basis, we also observe that with this kind of growth of TVO within the risk curation business, the on-chain yield is actually stably dropping. Before the booming of the risk curation business, the benchmark rate or the fair low risk yield is around 15 to 20%. However, with the risk curation business, it means the market is getting more and more efficient in finding the yield, and the yield get diluted very fast. Right now, the benchmark rate or the benchmark yield is around 10%. And if you look at the Gauntlet USD Alpha Fold, you can see the APY is only 7%. So even though the yield at the very beginning looks very attractive, but it's getting lower and lower. And then right now, the banks, the deposit give you like 4 to 5%. And for the Gauntlet USD Alpha, which is a very low risk yield, you can only earn 7%. So the next question is that, is the 2% spread really worth the user's time to learn a whole new ecosystem they're already familiar with? And then, so that's the two questions the Genius Act lobbyist or supporter have to answer. And the last question is that a lot of people are asking is that if the Genius Act is really bullish for the crypto market. And I would say short term, probably no, but in the long term, probably yes. Because in the long term, there are two side effects or the benefit that can come with the Genius Act. First one is that on-chain borrowing costs can be lowered by the Genius Act because there are more stablecoin supply on-chain. And if the people really deposit into this vote, it means that this vote creator will actually actively allocate this asset across different borrowing market. It means that the on-chain borrowers will have more liquidity to borrow from. And therefore the on-chain yield can be lower. It means that the cost for leverage is lower. And also it means that people have more incentive to build leverage. And therefore it can somewhat be bullish for the crypto market. However, it can also work in the other direction. It also makes it cheaper to, for example, do your short selling with the perps because the borrowing cost of stablecoins will rise. And the other reason why in the long term it might be bullish for the crypto market is that it provides incentive for everyday people to learn how the blockchain works, to learn how the crypto or stablecoin works. And in the long term, they'll understand what it's all about, what MicroStrategy is all about, what ETH is all about, and what short gaming is all about. Therefore, they are more willing to make it part of their portfolio. For example, in the future, probably because there's a Genius Act passed, it means that people are getting more and more comfortable with the stablecoin. And therefore, there's a chance that, for example, mutual fund, pension fund, insurance company will start to look at the possibility of using stablecoin to make some investment on. So that is another scenario. And so this is some of the reason why in the long term, Genius Act might be bullish for the crypto market. However, in the short term, as you can see, the act itself strictly limit the definition of stablecoin into payment stablecoin. So it means that the act itself does not want to have anything to do with the crypto trading or with the DeFi farming. Yeah, that is all about the Genius Act and some of the implication and probably the following development that we might see in the next few weeks or in the next few months.